Thank you very much, Klaus. Ladies and gentlemen, I will now explain to you how Uniper's management board and supervisory board assess Fortum's offer from a financial point of view, and I will particularly deal with Fortum's offer price. Klaus Schäfer just said Uniper's executive board and supervisory board do not believe the consideration of 21.31 euros per Uniper share to be adequate from the financial perspective. That assessment is based on our own examinations and the estimates of the banks advising us. Let me give you the three main reasons for our assessment that the offer should be rejected. Number one, the offer does not reflect Uniper's long-term potential as an independent company. Number two, the offer does not include an adequate premium, and from an economic perspective, it is also lower than stated by Fortum. Thirdly, the offer leads to a deterioration of Uniper's financial conditions. I will now look at the individual reasons in more detail in the above order. Number one, the offer does not reflect Uniper's long-term potential as an independent company. Since it gained independence, Uniper has proven that it can thrive on the market as an independent company. Its share price and market capitalization have more than doubled since the listing at the stock exchange. The share has exceeded all relevant indices. Our operating performance is stable, and we have significantly strengthened our balance sheet. Our debt has fallen sharply, as have our costs. We've successfully optimized our portfolio, and with the sale of our stake in the Russian Yuzhno-Russkoye gas field this year, we've already achieved our deleveraging target. Uniper is posting sound figures. And as a result, our investors are quite obviously convinced about our business model. The best proof of that is yesterday's closing price of 23.80 euros. Since day one of our independence, we've constantly delivered what we told the capital market. We have followed up our words with actions. That's why, from the outset, Uniper's share price has kept on performing positively on a steady basis. In this time, Uniper has published a number of announcements which were relevant to the share price. For instance, we recently presented our half-year results on the 8th of August 2017, where we adjusted our earnings forecast and increased our proposed dividend for fiscal 2017. We believe that Uniper's positive business performance to date and its strategy indicate that our company has in the long term a far greater potential. Reason number two, the offer does not include an adequate premium and from an economic perspective is also lower than stated by Fortum. Fortum cites a large number of comparisons for the offer price in its bid. Uniper's executive board and supervisory board believe that these details and the resultant premiums are misleading. As regards the premiums mentioned, Fortum also completely ignores external factors that impact Uniper's performance, such as the recent positive trend in power prices. Even though Fortum always stresses that the company only wishes to be an active investor, it will gain extensive control of Uniper solely by acquiring E.ON's stake. In such a transaction, a control premium is usually paid. The average control premium for cash offers for takeovers of companies in Europe since 2002 is around 35%, based on a share price 4 weeks before the transaction is announced. That means Fortum would have to submit a bid for Uniper that is around 26% above the current offer price. The median upside targets for Uniper's share available from equity research analysts are currently at 23.20 euros, and that figure does not include a control premium. The offer price of 21.31 euros per Uniper share is thus around 8% below the median for the upside targets. In addition, the actual cash value of the offer price is significantly lower than that stated by Fortum. Assuming the takeover is completed by Fortum's latest anticipated date on the 31st of October 2018, which would then also be the time when shareholders are paid the offer price, the actually paid offer price must be calculated back and discounted to the date of today's statement. That further reduces the cash value of the overall compensation. Given an adequate return on equity of 7 to 9%, the cash value of the offer price is thus actually between 20.31 and 20.66 euros per Uniper share, and therefore much further below the current share price. Reason number 3, the offer leads to a deterioration of Uniper's financial conditions. Fortum's offer will mean that Uniper's financial conditions will deteriorate, possibly even significantly. The negative effects of the takeover offer for Uniper and its investors are already very clear with regard to our rating. Thanks to its great efforts, Uniper has come very close to achieving its goal of a comfortable investment-grade rating. When Fortum's takeover plans became known, the rating agency Standard & Poor's questioned the credit rating of Fortum and Uniper. That's because the transaction may have a negative impact on Uniper's creditworthiness if Fortum exerts a negative influence on Uniper's financial policy, or if Fortum gains control and Fortum's credit rating deteriorates significantly at the same time. Standard & Poor's has already stated that even with completion of the Yuzhno-Russkoye transaction, the previously envisaged direct upgrade of Uniper's rating to BBB will be suspended for an indefinite period of time. Although we at Uniper have done our homework rigorously by reducing debt and improving our cash flows, we could therefore lose our positive credit rating again as a result of Fortum's takeover. A possible downgrade of the current rating would weaken Uniper's position in the global energy trading business. In our view, however, a strategic partner should not be one that jeopardizes our credit rating. Our stock exchange listing is also an important aspect for Uniper. It enables us to obtain funding independently of banks, such as by issuing new shares. However, Fortum also does not rule out the possibility of pushing out minority shareholders in the long term through what's known as a forced sale of shares, a squeeze-out, that is. That would lead to the loss of Uniper's stock exchange listing. At the same time, Fortum itself notes that its leverage ratio would deteriorate below its own targets if the offer is successful. That means that in all likelihood there would not be any money to fund Uniper's strategy for the time being. Ladies and gentlemen, all these reasons have persuaded us to reject Fortum's takeover offer from a financial viewpoint too. Uniper's executive board and supervisory board do not believe the consideration of 21.31 euros per Uniper share to be in any way adequate. Finally, please allow me to say a few words on the compensation EO would have to pay if it does not sell its stake in Uniper to Fortum but to a rival bidder. That compensation payment of at least 750 million euros and possibly up to 1.5 billion euros is absolutely not customary at such a level and has a considerable impact on possible rival offers. Given the prevailing conditions, a bid from a third party would have to include an offer price of at least 30.80 euros to be attractive from E.ON's perspective. The obstacles to such an offer are therefore almost insuperable. That is damaging to all shareholders of Uniper, including those of E.ON, and ultimately to the company itself. That's because a potential offer that is far more attractive for Uniper's shareholders and the Uniper as a company is in all probability thwarted by the agreement between E.ON and Fortum.